Today, we're diving into BitMine Immersion Technologies, that's ticker BMNR, and their seriously ambitious new game plan. The company is making a massive pivot, and they're aiming to turn their enormous Ethereum treasury into a high-yield, cash-generating machine. So let's break down exactly how they plan to pull this off.
Right off the bat, we have to talk about the headline number, $374 million. And get this isn't some pie-in-the-sky long-term goal. This is the potential annual revenue BitMine thinks it can generate with its new strategy. I mean, if they nail this, it would absolutely transform the company.
So, the natural question is, how is that even possible? How does one company just pivot and start generating that kind of cash? Well, that's what we're going to unpack in this explainer. We'll look at the assets they're sitting on, the machine they're building to create cash flow, the big controversy surrounding the whole plan, and of course, the potential payoff.
So, where does a plan this big even begin? Well, the entire strategy is built on top of a massive, tangible asset that they already own. This is the fuel for the entire engine.
Okay, to get a sense of the scale here, just look at this number. The company holds over 4.11 million Ether. And no, that's not a typo. At today's prices, we're talking about a treasury worth billions and billions of dollars. And this isn't a projection or a goal. It's what they have in their wallet right now. Now, to really wrap your head around that, their 4.11 million ETH represents over 3.4% of the entire global supply of Ethereum. Think about that. One company controls a pretty significant chunk of one of the world's most important digital assets. And you know what? They're not stopping there. The company's stated goal is to achieve what they call the alchemy of 5%. That means they want to eventually control a full 5% of all ETH in circulation. Just imagine that, a single public company holding 1/20th of all the Ethereum in existence. And it's this huge reserve that they're about to put to work.
Okay, so holding a giant pile of crypto is one thing, but turning it into a cash flow machine, that's a whole different ballgame. So how exactly does BMNR plan to make this massive asset actually work for them?
This slide really shows you the brilliance of the pivot. They're moving away from their old business, traditional crypto mining, which, as you know, is super energy intensive with really volatile profits. Instead, they're jumping into Ethereum staking. It's clean, it's efficient, and it's designed to produce a much more consistent, predictable yield. It's a fundamental shift from a high-cost business to a super high-margin one.
For anyone who's not totally familiar, let's just quickly define staking. In the simplest terms, think of it like earning interest on your crypto. You lock up your ETH, that helps keep the network secure and running, and as a thank you, the network pays you rewards. It's kind of like a high-yield savings account, but for the digital world.
So how are they doing this? Well, it's all built around their proprietary system, which they call MAVAN. It creates this amazing compounding loop, like a flywheel. First, they stake their giant treasury. That generates rewards every single day. Then they take those rewards and immediately use them to buy even more ETH, which they then add back to the treasury to be staked. It just grows and grows and grows.
And here's a number that just jumps off the page. The source claims that BMNR can hit profit margins of around 95% on these staking operations. So how is that even possible? Well, they're using all the expertise from their old mining days, stuff like immersion cooling, to run their computer systems, their validator nodes, at an incredibly low cost. That efficiency right there is their secret sauce.
Okay, so far, this all sounds almost too good to be true, right? Well, there's a huge point of debate here, a shareholder vote that has some people pretty nervous, and this really is the 50 billion share question.
Here's the deal. There's a proposal to increase the number of authorized shares from 500 million all the way up to 50 billion. Now, when most investors see a number like that, the first word that pops into their head is dilution. But the company says, hold on, this isn't about dilution, it's about giving us the strategic flexibility we need for massive future growth.
And the company's chairman, Tom Lee, put it this way. He says it's all about creating flexibility for accretive capital raises. Now, that's just a fancy way of saying they want to be able to raise money in a way that actually increases the value for everyone who already owns shares instead of watering it down. So let's unpack what they're saying. They want this flexibility to do things like stock splits if the price of Ethereum goes to the moon, or to fund strategic acquisitions. But here is the absolute crucial part, the big promise. They have pledged not to issue a single new share below the company's net asset value, or NAV. The NAV is basically just the value of all their ETH divided by the number of shares out there. So by making that promise, any new shares they issue should, in theory, actually increase the amount of ETH that's backing every single share.
So, with that big concern hopefully addressed, let's get back to the fun part, the potential upside. If this plan gets the green light and they execute it, what could the reward look like? The source material lays out some pretty exciting numbers. This chart here really paints a clear picture. Right now, the company's net asset value is floating around $32 per share. But once that $374 million fire hose of staking revenue really gets turned on, the source projects that the NAV could jump up to $50 or more. And that projected NAV jump leads to the first major stock price target being talked about, $75 a share. This is being presented as a very real, near-term possibility, justified by that powerful combination of their growing ETH treasury and that new high-margin staking revenue. But wait, it doesn't stop there. The source also points to a more ambitious, longer-term target of over $100 per share. Now, this bigger number is tied directly to a potential monster rally in Ethereum itself. If the price of ETH rises significantly, the value of BMNR's treasury would just explode right along with it. So you might be asking, who's actually buying into this story? Well, the source points to some pretty heavy hitters. You've got institutional whales like Ario Capital buying up more shares. There's apparently huge interest from retail investors in South Korea, and maybe most importantly, management's own bonuses are tied directly to growing the company's ETH holdings, so their interests are perfectly aligned with shareholders.
All right, let's pull all these different threads together. What is the final bull case for BMNR, according to the source material? What's the big picture?
When you boil it all down, it comes down to a few powerful ideas. At its core, BMNR is becoming a leveraged bet on the future of Ethereum. It has a brand new, high-margin business model that's designed to print cash. It has a fortress-like balance sheet with zero debt. It's on track to be the first major crypto company to offer a dividend. And it's backed by institutions and insiders. The smart money seems to be on board.
And that leaves us with the final, massive question. BitMine is at a huge turning point. Is it really creating a whole new blueprint for digital wealth, becoming the absolute go-to stock for anyone who wants exposure to Ethereum? Or is the sheer scale of its ambition, from owning 5% of all ETH to that 50 billion share proposal, is it just too big, too audacious to actually pull off? The answer to that is probably going to shape a big corner of the crypto market for years to come.